Well, we talk about the COP21 agreement as a clear reference for investors because this objective will drive substantial changes in the energy transition. So that represents, on the one hand, some opportunities that investors have to look at, but it also represents potential transition risk because some assets will see their value drop down and other assets will see their value go up. So from a transition risk understanding perspective, investors have to take that into account. This is key and crucial for them. It's a way to just manage their assets in line with their fiduciary duty. On the one hand, they also have to take into account the potential physical risk linked to climate change, which is also a crucial element that can impact the value of the assets investors have in their portfolios. Well, first of all, it is fair to say that clearly linked to the climate change policy goals, you have a very important and broad set of opportunities. And that translates into specific investment opportunities into every asset class. So it's fair to say that you can really take an holistic approach by taking into account these climate change issues, but also opportunities across asset classes. Just to give you some examples, when you talk about real assets, real estates, you have to take into account energy efficiency. That is a key driver of value for real estate investment. When you talk about venture capital, of course we have to be innovative when it comes to providing solutions related to the energy transition. Now, when it comes to the equity space, we talked about new opportunities, but also potential losses coming from the new policies and physical risks. So this is something you want to take into account. Now in the fixed income space, of course, you have to take into account the potential risk linked to climate change, but also the potential opportunity sets given by recent innovation in the green bond space. And in this area in particular, we have partnered with the IFC to expand the green bond market from an overly dominated developed market to see more green bond issuances in emerging markets. And that's a way to provide investors with yield as well as impact. So as you can see, by perhaps thinking outside the box, acting as a responsible investors, you can really help investors meet their fiduciary duty and support climate transition goals.